A lot of messages on social media asking me about direction, bias. It seems to be people's biggest problem slash difficulty when trading. So I have now built a new series that we're going to be strictly looking at direction and training the eye to see it on a consistent basis. So without further ado, let's hop right into the charts. All right, so here we are on the gold futures chart on the 15-minute time frame. Okay, so again, the main focus of these videos going forward are going to help you build a bias, build that direction consistently sometimes over a daily basis, but over the long term. Okay, I want to train your eyes to see liquidity and see these concepts, see setups in real time. Okay, so we're going to start here from the left hand side and work our way over to live price. Again, just building that narrative. So what can I see? Big bullish move to the upside, taking out all of these highs. This induces buyers into the market. Okay, so anybody looking to take longs, they will look for longs in these areas, and that's what I want to see, right? I want to see these reactions here, because this now tells me as soon as we move away, we have liquidity below these lows here. Okay, so we'll mark that on with that horizontal ray. We have liquidity below 1665 now. Okay, and it can be used as a future target. Perfect. From there, we go long to the upside, taking out some more internal highs. Okay, and if you continue following along with this current PA, we print high, low, and then take out previous high here. Again, that induces buyers into the market. Okay, and then you can see here on a very small perspective, this is throughout Asia session. We build liquidity. Finally, we take all that out. We respect this high from the left-hand side, which is fine. We're going to make this a blue box, because these could be areas to trade from. However, this one isn't the best example yet. So we tap into this area of interest from the left-hand side, and then we move short. Okay, high, low, high, low, high, and then another sell-off to the downside. Now look, if I drag this red box over, you can see how price is still using it as, you can call it as like support, right? Once, twice, 3 times, and 4 times. And then finally, again, moving away to the upside. So this now tells me we have even more liquidity to the lows. So that's perfect. We want to see this. Same situation. Look at this internal liquidity built for us. Okay? Anybody looking to go short in this channel had liquidity above this high. Okay? So we're hunting for that. Okay? Continue using current price action to now build that entry. Okay? So since we have this big bullish move up, again, same thing over and over and over. This is now going to be viewed as a trap. Okay, I'm going to drag this red box over to clean this chart up as much as possible. But again, any buyers looking to get involved in this market will use these areas to enter. Okay, and we need to understand that. Okay, because that's going to be future liquidity for us. So let's continue following along with price action here. We get another push to the upside, taking out highs. Again, what does this do? This induces buyers, right? So they're going to be looking for longs in these areas as well. Okay, so slowly inducing more and more buyers for us to now target all that liquidity. Okay, now look to the left hand side, and this is important. Remember this, we had this build up, and then we ran that build up, okay, created this high with no liquidity above it, and then look what we did right below. We built this internal liquidity that we can view as sellers being in the market here. Okay, so if I drag this area, this whole POI area, look how we tapped into it. Okay, and moved away. What does that now tell us? Liquidity above that high. Okay, very, very simple stuff. Again, from a retail perspective, when you see traders look for that break of structure there, they want to be using these areas as a sell. So they would enter sell positions here. The price moves away in their direction. So now we have liquidity above that red area. Same situation here. High respects this high from the left, leaving liquidity above these highs. So if I simply put a line over there, drag it all the way over to the right, look what's now happened. We have stabbed above it, and it's already giving us that reaction. Okay? Again, we're not really focusing on entries too much here. This is all about direction, understanding where current liquidity is lying. So we stabbed out this internal liquidity to the left-hand side. This high here should not get ran. The reason being, we stabbed liquidity out, created this high, and then moved away. So there shouldn't be any liquidity above this high yet, unless we come in and tap it, of course, which we're now starting to do now. Okay, so as for entries, you could take a sell as soon as this liquidity is taken. The problem a lot of people have is sometimes they'll still want more of an extreme entry and they'll wait for price to come all the way to the extreme. It's not necessary. You will find a lot more consistency if you just take entries right when the liquidity is taken. So you can see here, you get tagged in right when these highs are stabbed, and look where my stop loss goes. Always above that high to the left. Okay, where can we target and why? I think an easy target for us, and we can all agree, is going to be down at these lows. However, as soon as we start running these internal points, we could definitely look to partial or roll our stop loss. So let's see what price does here. So we get a nice reaction to the downside. Still kind of holding these areas. Why are we struggling here? Remember, BOS for retail, they want to look to long these regions over here. So that's why we struggle there for a little bit. Okay. Finally, we start moving to the downside. Again, now that we've taken out this internal high, you want to be either paying yourself and or rolling your stop loss. So in this example, we're going to roll our stop loss above that high. Okay. And big surprise, look at this. We come into this area over here, this trap area, and look how we struggle. And so far, we've been trading in this area for over 2 hours, inducing buyers. And boom, would you look at that? So this is a great example for you guys. Low taken, high taken, trapping sellers, and then that continuation comes down perfectly. And coincidence, we come right for that liquidity. Okay, again, look at this. Buyers, 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 all building liquidity at the lows for us to target. All right, so here we are on the gold chart for today. We are on the 15-minute time frame, and to be honest with you, we're only going to stay on this time frame right now because this shows everything clearly. Okay, so the first thing we want to do is find liquidity, mark out specific areas on our chart, and follow along so we can build that story, build that narrative. So what can I see? We can see price went bullish. Okay, this is on a Tuesday through Tuesday night into Wednesday, taking out a high from the left-hand side. Okay, and you can see following that, it's on the 15-minute time frame, so it takes a little bit of time. Okay, but we trade a higher a little bit after taking out this high here, and then we get that sell-off to the downside. Okay, taking out these lows. Perfect. From there, we go short, and then we print another high, taking out some internal highs over here, and then big sell-off. Look at the volume in this sell-off. Okay, keep an eye on that because we're going to come back to that in a moment here. But remember what we did over here. So we took out this high. Now, why is that important? Why is that relevant for us? I'm going to mark this on as a BOS. Okay, because again, buyers are going to view this as a market structure shift, a BOS. So now when we come back into these regions here, anywhere in these imbalances, they're going to be looking for longs. So maybe you had buyers looking for longs in here. Okay, price went in their favor, then trap them. Okay, and then here, same thing. We get reactions and then price went in their favor. Right, so let's mark this out here. I grabbed this imbalance, this whole candle, this whole area over here. Basically, if you went into a higher time frame, it's probably like an order block or a POI retail would see. But then look at that reaction we get. Okay, so a lot of volume to the downside to induce sellers. Okay, and then buyers are entering positions here. We want to see this occur. Okay, we want to see this move to the upside, taking out this high here, which again, retail is going to view this as a BOS in the market for them. Okay, now, since they view this as a BOS, same thing applies. They're going to want to buy. Retail is going to buy. I always say they're going to buy, but I'm just viewing it as like a retail perspective. They're going to be buying in these regions down here. Okay, the extreme or any of these imbalances over here, you can see we get some short-term reactions. Okay, and then at the low, look what happens here. Same thing, but just on a smaller perspective. Price trades below the low, then price trades below the high. Okay, again, retail is going to view that as a break in the market structure, a market structure shift. So again, more buyers are going to be entering down here at this red box. Overall, if you just follow my crosshair, okay, into this low over here, remember, reactions, reactions. So we're building liquidity over here, right? But then look to the left. Where did this reaction come from? This low. Continuously follow to the left-hand side. We have been reacting in this POI the whole time, okay? Don't forget, this is where this whole move started from, okay? This whole trap, you could say, from low to high. Again, taking out that high, which induces buyers. right? But again, you always want to kind of track where all that liquidity is lying. So boom, below that low. So let's mark out this low over here, okay? And coincidence, look what we have right below, an area of interest. Why is this an area of interest? Since you can see I just marked on this low over here, okay? We swept that previous low out and we went long, okay? Which tells me we don't have any liquidity below this low. Okay, so I can mark this on just like this. And I'm basically gonna predict, I'm gonna expect that price is gonna go bullish within this area after taking out the liquidity. Okay, that's very important here. Okay, because since buyers enter positions in here and all literally all the way in here, because this is all a buildup basically, their liquidity is gonna be below this low. And again, that's when we want to look for buys. Okay, so how do we enter now? Buy limit can be set just like this. Stop loss is gonna go, if you follow my crosshair to the left-hand side over here, stop loss is gonna go right below that low, and that's always gonna stay like that. So again, this low here determines how big our stop is gonna be. Sometimes the stop's gonna be all the way down here. It's gonna be a little bit bigger. Sometimes, in some cases, it's gonna be smaller. So basically what I'm trying to say here is the market dictates how big my stop is gonna be. Okay, so it's very systematic. Now, what can we target? I mean, we have plenty of targets to the upside. If you can see here, look at this whole buildup we had on the way down, okay? This is all a buildup of liquidity, right? You can mark it on as trend line. You can mark it on, again, like a channel, like I had before. However you wanna mark it, that's fine. If you wanna zoom out a little bit further, we even have more internal highs over here, right? Why would I mark this on as liquidity? Check this out. Low taken. Highs are respected here, and we move away, right? So we're gonna view this high as liquidity as well. So a great target could be up here. Drag all that all the way up. And yes, it's quite a big target, so this could take the day to play out. It could take 2 days to play out. However, you gotta follow step by step and understand, if we did take a long here, look at all the internal liquidity we've left. Look at all these highs here. Equals, trend line, another high up here. We could possibly get short-term reactions up here, which is fine. Okay, but overall, look to the left-hand side. We have this, okay? And this high respected the highs to the left. So same thing applies. We now have liquidity above those highs. Perfect. So if I play out a candle, I think the next candle tags us in perfectly. All right, look how now buyers have been trapped. So anybody that was looking to go long above these lows, trapped, okay, liquidated, taken out of the market. And I believe this was a news-driven move, so bear with me here. I think it's quite fast. And we start getting some momentum to the upside, another candle, and then I think it gets quite volatile soon. And boom, target hit just like that from 115-minute candle. I believe this is when Powell was speaking, okay? And that's why the volume was kicked in so much. This ended up being over a 300 pip move on gold, okay? But yeah, just a quick summary of what's been going on here. Remember, we need to see this occur, okay? Because this induces early buyers into the market. They're gonna be looking for longs inside of this POI here. We allow all this to occur. We want to see them get induced. And then as soon as they get trapped, this is when we take advantage of that move. All right, guys, today we are going to be on the NASDAQ or NQ, whatever you guys like to call it, on the 15-minute time frame. So we're going to stay on this time frame for now. Just like the previous episodes, we're going to mark out everything we see, okay? Because again, we want to train those eyes as much as possible. So right away, what can I see? In more relevant, more current PA, I can see that we have been building liquidity above these highs. Okay, and if we look to the left-hand side, where has that reaction been coming from? And what do I mean by reaction? This reaction here. What did we react from to the left-hand side? And all I can see is we have been respecting this high, building liquidity, right? So eventually, this high to the left-hand side is going to be used as a future target, a future buy target, okay? But in order for us to buy this thing back up, we're going to need to see lows taken on the other side of the market. So what do I mean by that? Let's continue following along with price action. So we're printing kind of like structure here for retail, but we've got a high, we've got a low, and then we go long, okay? Long taking out this high. Now, why is that important for me? I understand that buyers have been getting induced now. So look, Anyone looking to buy down here, they're gonna be getting trapped. Now, ask yourself, this reaction down here, this wick, this low, what did that tap into on the left-hand side? We can see that this whole area has now been used. Okay, it's been tapped into, meaning we are building liquidity below this low, right? So what we can do, we'll just keep it as a blue line to keep this as simple as possible. We're gonna wanna see price below this low now, because now that means buyers will get trapped, they'll be liquidated. And then we can eventually look for that buy and then target the highs left intact. What do I mean by intact? Again, we have left these equal highs here, and this is in Asia and in London session. And then off the back of New York Open, 8:30 a.m., we go short, leaving all of these highs intact. And again, yes, we can target this high, but look to the left-hand side. Don't forget where we've been reacting from this whole entire time, this blue high up to the left-hand side. I guess you can say from the higher time frames, right? Because this is from a couple days ago on Friday. How can we take advantage of this now? We want to be looking for buy entries. Coincidentally speaking, look what we have below the liquidity, below this low over here. Price induced higher, okay? To induce buyers into the market. Then we had a sell-off to trap anybody buying above this low I just marked on. Okay, look at that liquidity sweep we have here. And then price moved bullish to the upside, leaving all of these imbalance and leaving this low down here. Why is this important? Just like our previous videos, this low shouldn't have any liquidity below it. So we can use it as a buy, simple. So I can mark out this whole area. Essentially, price can actually go long anywhere below the blue line, anywhere below the liquidity. Okay, it does not have to come all the way to the extreme. However, in order for the RR to make sense, sometimes I want price to come a little bit deeper. So this example right here, you can see if I set my limit, stop loss is always below the low. And let's drag this over to live price. And then my targets, you have the equal highs left for us in Asia, and of course our higher time frame target to the left hand side. So you can see now the RR makes more sense. We're risking 1R to gain about 4R. Okay, however, if we just took a buy up here, the stop loss is quite big, right? So it gets hurt a little bit, the RR gets hurt a little bit. We're going down to about 1 to 2. And just per my system, I'm not saying 1 to 2s are bad, but per my system, I don't like to take those kind of trades. So I wanted price to come as deep as possible, okay? So this is exactly how we're gonna be setting our limit. And again, we need reasoning, we need logic. We're not just buying because liquidity is taken. No, we're buying because liquidity is taken, yes, and we have highs intact. We have liquidity to target. So again, that's our reasoning for price to push higher, okay? Now, if we continue playing along with price, stock open, I believe gets announced right now. So that's 9:30 a.m. Eastern Standard Time. And look at that, we get tagged in right in our area. Again, don't forget, why do we need to run past this low? There is no reasoning to run past that low. Why? We have swept liquidity out, printed this low, and moved bullish to the upside. Okay, so we don't have a reasoning to sweep this low yet. So then we tap into our area here, and look at that rejection on the 15-minute. We start moving long. And if I continue to play price out, so check this out, we come up into the high, we respect it temporarily. Let's move it as a red box. We respect it temporarily, go short, come up to the top, take out Asia high. But don't forget, we haven't taken the high from the left yet. We haven't taken all that liquidity yet. So if we get any pullbacks, which we do here, high to low, it should be short-lived, and overall, just a continuation back to the upside to hunt for that liquidity to the upside, okay? And you can see here, anybody looking to buy above the low, trapped. They have now been taken out of the market, okay? And if I play price low, and boom, just like that, anybody looking to sell this asset, they have now been trapped, okay? This is a textbook setup, one of my favorites. All right, guys, I hope you enjoyed episode 3 of Training the Eyes. Again, please do us a favor, like, comment, and share these videos, and subscribe if you have not already yet. We have a lot more videos getting released shortly. See you guys soon. We'll talk in a bit. Right now we are on the 15-minute time frame. It is, I have price rewinded to around 8 a.m. So just about New York open, not stock open, but New York open. Now let's mark up this chart in front of us, kind of build that narrative. So what can I see right away? On Wednesday in New York session, we grabbed these highs. Okay, you can see that we have imbalances above, but we grab these highs and then move away. So why is that important? This now tells me that we're starting to build liquidity at these highs. Okay, so if I drag this all over, and again, we'll tap into some more current price action in a moment here, but talking about this high here. So again, taking out these highs, tapping into these imbalances on the left-hand side, and then selling off to the downside, okay? Clearing some internal lows here. After that, we go back long, okay? Why? We're now gonna have liquidity above this high. This is where sellers are gonna be tucking their stop losses, okay? So look how price runs for that high. Something that's important that we need to touch on here is, since we have now we're starting to build liquidity at this high, and when I mean this high, I mean this one right here at 23,552. Okay, look at this. Once, 2 times, and now 3 times on this current day. We have now tapped into this area. We've been respecting it over and over and over. So now just think about it from that retail perspective. Okay, the amount of liquidity that's being built and engineered above that high. Okay, coming into today's price action, okay, we're gonna hop into the 5-minute now so we can look at more of an intraday perspective. Same thing occurs, just like what happened over here. We took out this high, but look what we left from the left-hand side. Okay, still leaving that high from the left, 23,552. We have to keep an eye on that. Okay, now again, timing wise, it's 8:15, and just because I remember we did have 8:30 news event. So let's mark that on actually for you guys. So 8:30, and then we'll also put on stock open. Okay, so again, 8:30 is a fundamental news event, 9:30 being stock open. Okay, both relevant times for us, both important times for us. So we'll drag that over, clean this chart up a little bit. Now looking at more current price action, what can I see? One thing I want to point out is right at London open, okay, literally right at London open, 3 a.m., price builds all this liquidity pre-London open, and then right at London open, stabs below, grabs that liquidity. Anybody buying, trapped. Okay, then we go long. All right, now something very important I want to point out here is, I can actually even open this up on the 1 minute to show you guys, but again, we want to train this eye to see this over and over and over. What do I see? A run on liquidity at London open, and then right away, look how we built all this liquidity from all of these lows. Look at this. If I drag this all the way over, you can see how lows respected lows here, and then here, and then here, and then just continued up and up and up and up, building all of that liquidity at the lows. Simple thing here is grab this low, okay? And now, ideally, we do not want to be buying unless this low gets taken out, okay? Because then when that low gets taken out, we now understand that we've ran a form of liquidity, right? We've taken buyer's liquidity. Now looking at more relevant, more current PA here on the 1 minute time frame, what can we see? So going into New York open, 7:30 here, finally trading around New York open, 7:55 a.m. we go long, okay? What do we go long from? Absolutely nothing. Okay, if I can just mark this random area out, but this is all liquidity, right? So what does this tell me? Any longs in this area should be a false reaction, okay? And look what happens. We take out this high, and then we take out these highs as well. We can mark this on just like this. Perfect. Now think about the importance of this bullish move we've had from A to B. This induces buyers, right? People thinking that this is a momentum switch, a break of structure. There's going to be buyers looking to get in positions down at the low. And again, I understand that. I want to understand that because I like to anticipate and expect these moves to occur instead of them happening right in front of my face and I'm shocked, I'm surprised, right? So again, I'm anticipating, I'm expecting false reactions in this area, all right? And now, if we get this run below these lows, okay, look what price has slowly been doing this whole time as well, right? If I draw this, what has it been doing? It's been engineering liquidity at the highs for us. And don't forget, we have this high we've left on the left, 23,552. Do not forget about that high. So again, look what time it is. Right at a news event. I will never, and those who are in my community and on the live calls know that I will never take a position before a news event. I'm always gonna wait for the news event to occur and then capitalize afterwards. Okay, because typically what happens before these news events is we build liquidity. And big surprise, look at this. We're building liquidity. News event occurs. We get a sell off to the downside. And struggle a little bit at the low. Finally, we take it. Now, as soon as we took the low, this is now where my buy entry is. I'm taking buys anywhere below this low because look at this massive imbalance we have. Okay. The thing is, I don't need the bottom. Sure, price can come down and tap this candle fill at the very bottom, or it can come to this 1 minute imbalance. That's fine. However, I do not need the bottom. I understand that price can go long anywhere in this area here, essentially anywhere below this black line, the liquidity. Okay, so that's why I'm entering there, and my stop loss remains in a safe spot here. So I'm going to tuck my stop loss below this low, just like this. Okay, now what can I target? A couple different targets in mind. First target always needs to be the structural high here. Why? Because this is now where seller liquidity is going to be. Okay, so what tends to happen is sometimes if we come back lower, then maybe we go long. Okay, it does not mean we're going to sell all the way back down. However, we understand that there can be reactions because there's liquidity above this high. So pullbacks can occur. Okay, and then maybe you have that continuation, or sometimes we'll just a pullback will occur and then we just go bearish. Okay. However, I want to be able to take advantage of taking profits above this high, paying myself above this high. Because again, I understand that there could be bearish reactions in the market. Okay. Now, at this current moment, it is 8:50. When I took this entry, I understood that my stop needed to stay below this low, and we still had stock open in about 30 minutes. So price could kind of screw around for the next 30 minutes and be slow, be sluggish, and that's exactly what we did. Look at this. So now we're approaching New York, stock open, sorry. You can see right at stock open, if I zoom in, again, same thing occurs on the M1 over here. We take out highs, it induces buyers, then price comes back down and stabs that low out once more. And in this scenario, it actually fills that M1 imbalance here. Okay, so sure, you could have waited for that extreme and that would have worked out for you. However, something I just want to tell you guys is it's not always going to occur. Okay, so my best advice for you is this is going to be the better entry here. Okay, I want you guys to be taking these kind of entries, not this, because you're going to be missing a lot of trades. And again, you don't need the bottom, you need the correct direction. That's what pays the profits. What am I going to be targeting? Again, train these eyes to see this. While this whole setup was forming, while this whole buy setup was forming, price engineered liquidity to the upside for us. Okay, sellers entered here, and over here. Okay, so you have multiple targets. I'm not going to just target something over here or something over here because that's not big enough for myself. I understand that I'm going to be targeting this structural point. Okay, and then if I want to hold any partials, again, I would target that high on the left hand side. Okay, because that's where that final liquidity point for me is going to be on more of the higher time frame perspective. Okay, now if I play this out, actually happened played out relatively quick, but there you go, full target met, just over a 1 to 3. And as soon as stock open was announced, look at this, 4 1-minute candles straight to target. Okay, now I actually took this trade myself live. Now I want to cover something though, and this is something everyone screws up on. Look how we've now taken out this high. Again, same thing applies that we've been talking about this whole time. Buyers induce. This is going to be a trap. We do not want to be buying from that. Also, look at this. Lots of liquidity at the lows. So, and again, I called this live. I said I don't want to be looking for any buy positions until this low is taken. Why? Look at the liquidity we've now built to the lows, right? And we've now just induced higher. This is now a trap. We do not want to be entering buys in here. Guys, this is going to be a big mistake. Even below these lows, big mistake. Need to be waiting for this low here. Okay, so if I play out price action here, check this out. We come to the low, look at this. We struggled for like what, 15 25 minutes. We struggled to low, inducing buyers. Finally we get that run below. Why is this important? This move from here, high to low, induces sellers. Okay, now think about it. Where did we just go short from? Absolutely nothing. We've been building liquidity at this high forever. Once, twice, 3 times. Now we get that false sell-off here from high to low. This is an automatic buy back up, guys. You want to be buying this kind of price action anytime this occurs. And look what happens. We struggle in the red box. Why do we struggle here? Same thing over and over. Sellers interested in pushing price down. Sellers interested in pushing price down in this area. And that's exactly why we struggled here for about 45, 50 minutes. And then finally, look at that. From low to high, we grab that liquidity. Okay? Trapping buyers, and then finally trapping the sellers here. All right, guys, so here we are on GJ 30-minute time frame. We're only going to bounce between a couple time frames. Honestly, remember, the sole purpose of these videos, this whole series, is to train your eyes as much as possible, right? So we always like to start with a naked chart. Okay, this is very standard, and we're going to mark everything up accordingly. All right, making sure you guys are following along the whole time. Please don't be afraid to rewind the video as time progresses to kind of, again, get those repetitions in and train the eye to see what we see. Okay, so what I usually like to do is I just kind of focus on like the overall swing points, right? And I just want to see where liquidity is, what areas we're reacting to, what highs and lows have been swept, okay, and then reacting accordingly. So right away I can see at the lows down here, price has swept out previous lows. Okay, now why is this important? Why is this run on liquidity important? We can see that we've been building liquidity in this whole area, right? And you have this whole range here, and we've been building, and then look at this, price induces higher, and then we get a rapid sell-off to the downside. Look at that 130-minute candle, big sell-off to the downside, sweeping that liquidity there. Okay, so any buyers buying above this low, liquidated. Okay, taken out of the market. All right, then price ends up going bullish, and then this is kind of price action I don't really involve myself in because we just had price takes the high, gets a pullback and goes long out of here. I don't typically trade from these kind of areas. Now we can follow along with price action here. Price induces higher, right? And what does that mean? We induce buyers into the market. So we're gonna bump down here to the 15-minute time frame to open this up as much as possible. And again, you can see that price is taking out this high, printing a new high in the market. Bear with me for a second here. I forgot to mention that before taking out this high, we swept this level of liquidity. Why is this liquidity? Very simple. Once again, look at this. We get this buildup of liquidity here, and then that rapid sell off to the downside, sweeping that liquidity. Okay, then we go and print that new high, taking out previous highs. Okay, what happens after that? And again, I'm going to bump down a time frame because we want to analyze this PA right here. Okay, and everybody always likes to say to me, what time frame do you use to analyze price action? What time frame do you use to identify liquidity? I use every single time frame, and this is a great example for you guys. PA is very squeezed up here on the 15-minute, so all we have to do, go down to the 5, and now we can break this down. So what do we see? Very simple, in my opinion. Look at this buildup of liquidity here, rangy, then we go long. Okay, telling me we've left liquidity below these lows, and look what price does for us. We come back and we sweep it. So per the system, we now understand that this can be entry number 1. Let me draw this out for you guys real quick. Okay, and we're going to talk about targets in the future. So for now, we'll bump it up here. All right, bear with me. We'll talk about targets eventually. Again, this is all about training the eye to see these things. You need to identify a buildup in the market, okay, which is what we've done. Price ends up coming down and sweeping it. Perfect. We want to see that occur because now anybody buying below here, they've been trapped, and we're able to take the buy as soon as the liquidity is taken, right at 199.603, because we have a liquidity block supporting our entry. Okay, and again, these are the things you want to train your eye to do. You want to be able to identify these liquidity blocks. Why is this a liquidity block? Very simple. Price ran a level of liquidity, created this low, and moved away to the upside, leaving a liquidity block, which is basically what we take our entries off of. Now let's continue following along and trading that eye as much as possible. We have left liquidity at the high, which what price ends up running for. Then the same thing occurs. So we're going to drag this over. We'll move this buy tool over to clean up the chart as much as possible. But same thing. We take the high and then take the lows. Okay, and then price moves bullish once again to the upside. Now I hope you're starting to see the consistent cycle of price building liquidity, taking it out, and then moving in the correct direction. And look what happened here. Price built, induced, trapped, and then moved in the intended direction. Same thing over and over and over. So let's continue on with price action, and we're going to go back to the 15 just because we don't want to be too zoomed in here. We want to get a good idea of where price is heading to overall and why. So here's that first entry we were talking about. After price takes out this high, you no longer want to be looking for buys right away because you're going to be trading above old highs. So look at this price action. Even this buy down here, not typically an entry I'd be involving myself in. Yes, it played out on the lower time frames. However, since we're now trading above this high, I do want to see more PA develop. And look what happens here. We build a lot more price action. Look at this high and look at this high. 1 and 2. Why did we sell off here? And why did this high sell off all the way back down to the lows? Look to the left. And I can see that we have been bumping our heads into this high on the left-hand side. So we'll drag that all the way over. And you can see, look at this. Once and twice, tapping into this area, okay? And then look, we induce sellers, trap them. And that's why price moves down to the downside, all right? However, we have now left liquidity above this high. So look what we can do. Boom, just like that. That's gonna be a future target for us. All right, now, again, we want to be training our eye over and over. What do we see? We've taken the high, okay? Why is this important? It induces buyers into the market. Now, we have levels of liquidity down here, another low down here, and let's go to the 5-minute again, because we just want to open up this price action as much as possible. We're going to be looking at this PA up here. Price takes out this low, all right? Then we get that pullback up into this internal high up here. Look what we do. We respect this high once, twice, 3 times, and then fuels the sell off to the downside, telling us we have liquidity above that high. Price is essentially leaving us a bunch of hints that we're going to be moving bullish eventually, right? We're not just going to buy. No, that needs to make sense, of course. But look how it's leaving hints, right? And remember the higher time frame, this blue line up here, and now in the lower time frames, these internal highs, it's leaving continuous hints that we could head to the upside. Okay, from this point, when we sell off, we take out internal point here, internal point here. Okay, don't forget the entry that we took before now becomes an LB. Buildup of liquidity. We stab it out, create this low, and now it could be used as an LB for the future. All right, so if you never took any partials here on this initial buy entry down here, you might have gotten taken LB, which is completely fine. Understand now though that this low shouldn't be taken. Okay, it should be respected. Again, why? It ran liquidity and moved away to the upside. That's it. And then think about it from a buyer's perspective. Okay, we want to mark on all these things again, just to train those eyes as much as possible. Since price is taken out this high here, retail is going to view this as BOS to upside. There's going to be buying pressure at the low. Look how the market respected it, inducing buyers here. Still going long, building liquidity at the low. Okay, you want to see this occur. You want to see that trap happen. Then we get that sell off to the downside. Perfect. How can we take an entry? We need to see a buildup. We need to see a run of that buildup. We need to see a liquidity block form for us, basically. And then the whole cycle starts again, over and over and over. What do we get here? And I'll mark this out just for the sake of this. View this as liquidity. Low, respected low, and look again, and then moves to the upside, taking out highs, leaving liquidity at the lows. I know what this whole picture here might not look like it, but we'll zoom in. Price took this low out here, okay? But when we're zoomed out, you don't see it really. You just got to zoom in to really identify it, okay? Giving us a liquidity block. Same thing. It is not hard to identify these LBs, these liquidity blocks we call them. Why? It's just we need to see a pool of liquidity built, and then we stab it and move away, leaving an LB for us. Okay, it's very simple. Okay, now the same thing needs to occur. Look at this, very clean. High, taken out, printing a new high. So this is going to be viewed as a trap. Look how price respects it once, twice, and moves to the upside, leaving liquidity at the low. Okay, now this is actually an entry I took, but I'll show you guys. Look at this. This is for hours, guys, hours and hours and hours. You got to understand that the common retail trader, they're going to be buying these lows down here. And I just drew this out, but you can see that we traded above this low for 5.5 hours. So just only imagine how much liquidity was being built below this low. Finally, price stabs it out. Look at this, buy entry. Okay, again, why is it a buy entry? We have trapped buyers. We have a target. Why do we have a target? Look at this. Look at the liquidity we're building at the highs. A ton on the lower time frames, but don't forget the higher time frame where this all started from, here. Okay? Entry taken on the sweep of the lows. Now you can see we have imbalance down here, LB to support our entry. So stop loss is gonna go below the low. Very simple, okay? And what can we target? You have a target here. Depending on, see the thing is, and this is a whole different conversation, we'll tap into this in future videos for sure, but you have multiple targets. And again, look at the hints price is leaving for you guys. And this is again why I wanna train those eyes as much as possible. Highs left, and then also highs left, okay? Leaving more and more hints for you guys that we need to move to the upside, right? So multiple targets, you have one being here, you have one being up here, we'll drag it over. Okay, look what happens after we take out these highs too. You get that pullback. Coincidence? There was liquidity above this high. That's why the market gives you a reaction back down to the downside. And of course, then finally, the last target would be up here for 72 pips, a 1 to 7.8. Of course, you don't have to hold full volume to 1 to 7.8. You could partial here, you could partial here, and then of course you have that last target. But I want you guys to see the repetitiveness of how we trade and how we even choose our targets. Every single target has a reason. There's liquidity lying at these highs. Okay, we're not just random highs. There's liquidity lying at these highs, one being here, another being here, and then finally, last target being here. All right, guys, I hope you enjoyed today's video of Training the Eyes episode 5. I'm gonna continuously bring these videos out. You guys seem to love them. You're getting a lot of value from them. Again, please drop a like, comment down below what else you guys wanna see from us. Also, I haven't mentioned this before, but we trade live every single day within our community. All our links will be in the description down below, and I will see you guys soon. This is gonna be episode number 6. We're gonna be going through a trade on AUD USD. But before getting into the entries, I really went into depth on building that narrative, okay? Building that story and starting with that naked chart and actually using replay to emulate those live conditions as much as possible to train those eyes. That's what we're trying to do here is I'm trying to drill these concepts into your eyes to a point where you approach the live markets and it becomes second nature. If you guys like this video, please toss a thumbs up. It helps us a bunch. Leave a comment down below of what kind of videos you guys want to see from us next. Turn those noties on. We got lots more content coming for you guys. Talk soon. All right, guys. So I have in front of us right now AUD USD on the 1 hour chart. And you guys know the drill. I don't really want to switch between timeframes too much. The sole purpose of these episodes of this series, again, is to train your eye a naked chart perspective all the way up to a marked chart perspective. I want you guys to be able to look at these naked charts as per the one in front of us right now and understand how to mark up the charts accordingly, following price action, tracking that narrative from the beginning all the way to the end. Okay, so I have actually backed up price on replay mode right now to an important time, and we'll get to that. But first, I want to talk about price action over here. You can see how AU sold off, went higher here, printing this high in the market. From this high, we sold off, a little pullback, and then a big continuation to the downside. From there, we can see we printed this new low in the market, okay? Taking out previous lows. From a common retail perspective, they will now view this as a BOS in the market. Since we have taken out previous lows, printed a new low, they've now viewed this as a BOS. Based off patterns, based off strategy and structure. Again, new low printed in the market down here, so BOS for retail. We need to understand that. That's very important because automatically I now know that there's going to be liquidity above this high. Eventually, because sellers are interested in selling below it based off this common retail pattern. Low taken, new low. Retail wants to see price back up at the high and they want to sell it back down. And as you guys can see, price actually ended up going bullish, took out the high. Why is that important? This, and we've talked about this how many times now, right? This induces buyers in the market. The importance behind us taking out this previous high is now buyers are interested in buying this market. So every time we get a reaction here, 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 this is inducing buyers to go long. And we want to understand that because you want to be able to track this liquidity. So what can we see here? For a while, after printing this new high, look how the market respected this low once, twice, and actually ended up taking out highs. You can see that we built liquidity at this high here I have marked out for quite a while, right? We have about 11, 12 hours of price action building liquidity at this high. Finally, we come up, spike it, and we sell off sharply. Zoom back out. All right, so again, we spike all that liquidity. We induce a bunch of sellers, trap them, and then we trade lower. Starting to sweep some of these areas on the left-hand side. Again, every single time we get a reaction from these areas, view it to be false. So look what happens here. Okay, and we're gonna track this. Price comes into this area on the left-hand side. So we grab all this liquidity from the left, price taps into this area from the left. This is when I want you guys to understand something. Any sort of buys coming out of this area, this red area from the left-hand side, if it goes long, that's fine. This is now known as a low probable move. So yes, there was a long that occurred, and it was actually just over 50 pips. However, it's a low probable move. We do not want to be buying in a bearish market. Why do I say bearish market? We have taken out this high. So now, as per our system, our strategy, we know that we want price back down to the downside. So why would we be buying this market? So again, we're looking for sells back down. We get that reaction out of this area from the left-hand side, view it to be false. Any reactions out of here will literally just build liquidity at the lows for us. You can grab this low, okay, on a lower perspective, but overall, we do want price back down here. So we're going to plot that blue line on. Again, we go bullish. What was the intention behind this bullish move? We can clearly see, I'll zoom in a little bit more here. We can clearly see, look at this liquidity buildup we've left. Sellers entering the market in this kind of price action. Then we get that sell off to the downside. That tells me we're going to have liquidity where? Above this high. And look what the market does. We struggled down here for a bit, and then again, look at the struggling kind of price action even over here. 12, 13 hours, we couldn't break this high. Building. Finally, we go long. Perfect. Trapping any sellers that were shorting below this high. This is when you want to start analyzing the price action that we get out of that. Look at this. Build. What do I mean by that? Look at this kind of price action. We'll just put 2 lines on here to kind of represent a little bit of a channel of price action. Just like this. Build. Finally, we trap higher. Look at the sharp reaction out of that. What's the importance of this? We have taken out a low from the left-hand side. Now again, why is that important? It is important because now since we have sold off aggressively with speed, it's induced sellers into the market. Same thing over and over, right? Look at the volume. 1, 2 candles. 2 candles sweep out like, what? 12, 13 hours of price action. So this high volume move, taking out lows, induces sellers again. Why? They're going to be trading this kind of price action, remember, based off patterns and stuff. So a common pattern, a common theme is price sells off, takes out a low. So we're going to view this area to be a trap. Look what we got here. Same thing. So since we have taken out this low with speed even, high volume, view this area to be a trap. We want to now see price above this high. Okay, so now you have to understand this whole narrative we built, that we've been tracking everything here. Trapping sellers, big sell off to the downside, reacting to areas on the left-hand side, going bullish in a bearish market. This move, and this is very important, this move from low to high is now providing us an opportunity to sell back down. Okay, you need to wait for this kind of move to occur, low to high. And again, if we zoom back out, don't forget about this whole bearish narrative, this whole bearish bias to the downside. We want this low taken out. Why? Don't forget about this, guys. This high has been taken. So that's a BOS for retail. Automatically, there's going to be a shit ton of liquidity at the lows down here. Okay, so we want to be selling into it. Cool. Now let's head back into the current price action again and track this narrative. So look, a lot of volume on the sell-off. Again, inducing early sellers. We do not want to sell yet. We want to see price above. And how would I enter this? I'm going to plot this sell tool on right at this high, and I'm going to cover this high from the left-hand side with my stop loss. Okay, we're going to talk about this in a moment. I'm going to drag my target to the target we've already determined, we've been talking about. Just there, perfect. 2 things we're going to talk about here. Why are we entering here? Why is our stop loss covering here? Okay, number 1, why are we entering here? Because since we have taken out this low, we now understand that this high is going to be having liquidity above it. There's going to be liquidity above it nonetheless. Doesn't matter because we've had a big sell-off to the downside, inducing sellers, which means this area, this whole red box that we've drawn on, is going to be a trap. That'll induce liquidity above this high. Simple as that. We like to take entries as soon as liquidity is taken, right? So as soon as this high is taken, liquidity has now been stabbed in the market. It's been liquidated. It's been trapped, whatever you want to call it. Now we're entering at that position. Why is our stop going above this high? Our stop is simply covering this high because look, it's a liquidity block. Remember what we talked about here? We built, Then finally, look what this candle did. This whole area was created because we have ran liquidity. We ran all of this liquidity built at these highs. And then we sold off with lots of volume. So I'm viewing this high right here, guys, to have no liquidity above it. So that's why I'm letting my stop cover it. Okay, think of the logic behind that. Again, rewatch this if it doesn't make a lot of sense. I get a couple questions on the liquidity block. It's actually not too complicated. Liquidity built, liquidity taken, and ran away. So now we can use this area as an entry point. Okay, so we take that entry here, stop loss goes above this high, and you can see with my crosshair, look how we're covering that high. Let's play price action out a bit here. We are now trading at the high. Look at this. This is now gonna be an area. Remember, sellers want to be entering positions here or even in here, anywhere in this imbalance. Sellers want to be entering positions. We understand that. So there's going to be liquidity above this high. We're going to put our limit right at this high at 0.66102. And look at the next candle does. Taps us in. Since we've taken out this high, what do we view this as now? Train those eyes, guys. Train those eyes. We've taken out this high. BOS to the upside. Buyers induced. They want to buy the low. Okay, look how we get a slight rejection as well. Next candle comes in. Boom. Taking out those lows. Perfect. Remember where we have our target. Any reactions before this low is taken, deem it to be false. Okay, a trap. I'm going to continue with price action. Look at this, guys. A little bit of a pullback in the market. Again, deem it to be false because any reactions above the blue line is literally just building liquidity for us. That's it. Inducing buyers, early buyers. And there you go. Look at that sell move we get off the back of that. Ends up moving actually quite a bit more to the downside, but these setups are the ones you guys want to be looking for. Textbook, okay? All the way from building that narrative, building that direction of the market, to taking that entry and then having the most clean target. So this is actually like a bread and butter kind of setup. Please rewatch this video if you guys need to. All right, guys, so here we are on Euro USD, and we're gonna be in the lower time frames, okay? And remember, the whole purpose of these videos, again, is just to train your eyes to see liquidity, how I view it. We're not gonna be going from higher time frame to lower time frame. That is for other videos. As you guys know, we made a bunch of videos on bias, diving into liquidity concepts overall. The sole purpose of this series, again, is to just train those eyes. I've used the rewind tool, and this is all we see right now. So I'm going to break it down with you live. We're going to follow that narrative and break it all down for you. Okay, so what can we see? Big sell-off to the downside here. Okay, after that, the market found some sort of recovery back up, taking out internal highs. This volume back up, grabbing highs, this induces buyers into the market. Okay, which means we could probably see a short back down to the downside. However, do we have liquidity below the low? Do we have liquidity below this low? That's the real question for you guys. I don't see any liquidity down here yet, so there's no reason for us to target this yet. There's no reason for us to look for that short yet. So let's follow along. We take out this high, again, which induces buyers into the market. So we can mark this down as a BOS, because again, this is where retail would be marking this thing out, and they want to be buying back down at the low. So what we can also do is put a red box down here to indicate an area that buyers went into the market. What else can we see? Price sold off, printed this internal high, and then continued off to the downside. After that, very choppy, very rangy, and we can all agree that we are building a lot of liquidity below these lows. Okay, so it can be used as a future target, but again, all we're doing right now is tracking liquidity and viewing where the market could be heading to next. So what we're gonna do is continue playing this out. All right, so we go long, and we're starting to run some internal highs to the left-hand side. And there it is. So why is this important? Since we have taken out this high, okay, grabbing liquidity above this high, this level that we're now creating could be a possible liquidity block. Now, it does not mean we enter a sell right away. No. Yes, the market could run bearish toward these lows, but my whole idea, this whole scenario that we're trying to frame right now is to see price back down to this low eventually. All I can see currently, we're gonna make this blue. All I can see currently is price has built internal liquidity. We grabbed an internal high, and that is it. So I'm literally gonna need more price action, because remember, if I don't see liquidity other than these lows, then we have no reason to trade yet. We're gonna play more price out.
Okay, now things are starting to get a little more interesting here. Okay, and as you can see, just the more data we have in front of us, the more price we have in front of us, slowly things start to make more sense. So what happens is price hunts for these lows. This is an area down here where buyers are interested in buying this asset. Why? Again, don't forget, BOS to upside up here. So since we've taken out this high, this area is where retail buyers want to be entering positions down here. Okay, they want to push price back up to the upside from here. They are going to be entering positions, buy positions back down at the low. We understand that. What else can we see? Before having this big sell-off to the downside, what did we do? We simply built liquidity at this high. Now, we're going to zoom in and identify why there's liquidity at this high. And again, this is very, very simple, guys. I don't want you guys to overcomplicate this, but check this out. This high respected this high. What do I mean by that? Simply tapped into this whole area, this zone, this price level, whatever you want to call it, tapped into it and moved away to the downside. Okay. And then look what happens again. This high respects this high. And then we have a big sell off to the downside. Now only imagine how much liquidity was now left above this high. If sellers entered here and sellers entered here, their stop loss is going to be right above this high, just like this. If it was maybe above this high, as soon as this big sell-off occurs to the downside, they're probably rolling their stop loss, okay? Above this high, or maybe even to break even. What I need you guys to understand is there is going to be liquidity above this high, okay? We've simply left highs to the upside. If our sell idea, if our sell target stays intact, and listen carefully, if our sell idea stays intact and we get a move back up to the upside, sells are active. Okay, we want to look for sells back down to the downside. But remember, we need logic. We need to make sure we have a target in mind. We need to make sure we have liquidity to the downside. And check this out. Coincidence? We have liquidity built, and right above it, we have our liquidity block. Why is this a liquidity block? Very simple. We grab a level of liquidity and we move away to the downside. Entry number one, and I think we can all agree now, is going to be right above this high, just like this, with the stop loss covering the high. Targets, in this specific scenario, we need to allow price to play out a little bit more. Why? We simply don't have any liquidity to the downside yet, right? We just had this big sell-off, and yes, we're coming into this area where retail traders want to be buying from, but we haven't respected it yet. So let's play price out. It does exactly what we thought was going to happen. We have tapped into this whole trap area, okay? And we go long. Now, let's analyze this price action that went on back down at the lows over here. And we can see that we have built liquidity here as well on a lower time frame perspective, right? These internal lows and highs. Look at this channel. This is the kind of price action retail wants to see. There's going to be buyers entering positions at these lows. So you can mark it out however you want. You can leave it like a trend line, or you can have a channel. Doesn't matter. All we know is liquidity is being built down here at this blue line. That's what this blue line indicates, okay? There is liquidity down here. We slowly trade back up to the upside, okay? Remember, we have left these highs intact. So let's see what happens here. Price finally takes out this high. Now, yes, you could have entered right away, and that's fine. And I want to show you guys something very, very powerful. We take out the highs and we have a sell-off to the downside, okay? Taking out lows here and taking out lows over here. Now, why is this important? We understand when we take out lows like this, this induces sellers into the market, right? So where's their liquidity going to be? Above this high. This is now going to be known as a trap. Again, you want to train these eyes, guys. We grab these highs, we get a sell off down. Now we have traded below these internal lows, inducing early sellers. So where's sellers liquidity going to be now? Anybody trading these lower time frames is going to be above this blue line. So look what happens. We grab that liquidity. So the trap occurs. Okay, we've induced sellers and now trapped them. Remember, we're trading within this higher time frame liquidity block to the left-hand side. So you have two options here. And this is where a lot of traders get psyched out. Okay, let's just say, and listen carefully here, please. Let's just say you guys enter as soon as this high gets taken out with your stop above this high. Now, what a lot of you guys are probably doing is when you get that sell-off to the downside, okay, you're a little bit in profit. What you're probably going to do is you're going to roll your stop above this high. And look what price does. Comes back up and takes it out. takes that trader out who mismanage their position, which is what probably a lot of you guys do. You tuck your stop above this high, you've now left an option for price to come up and take you out and then run to the downside. Understand this, if you enter right away, what happens sometimes is we induce and then trap once more, and then the move occurs. Don't get psyched out. Don't get scared when we print this high. You can't have any fear. Allow price to play out a little bit sometimes. That's why we want to keep our stop above this high to the left-hand side. That's the most important part here. Okay, don't mismanage your trade based off emotion. All right, so again, first opportunity would have been as soon as the highs are taken out from the left, but if you were patient, another opportunity was as soon as that high is taken out, again, stop loss above this high from the left, just like that. Target right back down at the lows, just like this. Let's play this out so we can all see what happens. Okay, and I think you can all see what happened again. Guys, listen, this happens over and over and over. I need you guys to start trading these eyes and seeing this. Trap down at the low. We get a false reaction up. This bullish move here from low to high. This is false. This is just inducing buyers. And look what we take out. Internal seller liquidity. Option number 2, entry number 2 possibly, right here. Okay, and stop loss above previous high, just like this. Again, targeting the lows. So you have 2 beautiful opportunities following the system, following the rules, and we're targeting that liquidity to the downside. And if I play price out, we get a pullback, and then eventually, boom, target smashed. All right, guys, we're here back on the gold chart today. Going to be staying on the 15-minute and probably in and around the 5-minute chart for the most part. Again, remember the sole purpose of this series of these videos is to train those eyes. So we're literally just going to study what's in front of us right now, because that's all that's important. I just picked a good set of price action to go over. We're going to cover everything from left all the way to right. So what can we see? We have a high in the market printed here, and we get a sell-off to the downside. We end up running all the way back up bullish and taking out this high that we printed before. Why is that important? Naturally, this means that buyers are induced in the market. It does not mean that we're just going to sell all the way back down. We need to pair that with liquidity always, but it's good to have an idea that when we take out this high here, buyers are induced. So following that, we print this high and we sell back off. We're naturally just going to mark on highs and lows and follow the liquidity. So low, respected low. All right. And we move away to the upside, taking out an internal point. Why is this important? Inducing buyers. We get a pullback, lows respected. So we're building even more liquidity here. All right. And we can actually even mark this out for you, just again, so we can train those eyes as much as possible. Just like that. Perfect. Off the back of that, we go long, taking out previous highs once again. And we end up printing a liquidity block. Okay. Why is it a liquidity block? We've simply just grabbed a level of liquidity and went bearish after that. Following this high, you know what? We will go into the 5-minute for this bit of price action here. We print this high, we sell off, and we print low, high, low, high. What is that? That is a simple market structure pattern. We take out a low, sellers are entering positions. So look, sellers entering positions, and then we move bearish very quickly. Okay. What does that tell me? We have built liquidity above this high. So we'll leave that there. That is simple structure liquidity for retail. Again, sellers would be entering here and here, and then it moves in their favor. Perfect. So now we understand that liquidity has been left here. Heading back to the 15-minute time frame, following that internal liquidity built, look at this big sell-off to the downside. Remember, these lows that we set up before, we ran exactly for them, almost like a magnet. Now, if we continue looking to the left-hand side, look what the market's tapping into. So this big sell-off, printing this low, look at the left. All I see is another level of liquidity. Why? Price takes out this high, we get a pullback, this low respecting lows to the left-hand side. And again, you can always draw this like a trend line, however you want to draw it. The importance of this is understand that we have built liquidity here. Simply mark this on. You can even grab these lows. You can grab the overall low if you want, but just to be a little bit more precise, we'll just grab these internal ones. That's completely fine. But look at this. We respect it once and we respect it twice. Why is this important? But imagine if anybody was buying down here at the lows, maybe they entered in here, or they entered in on the second reaction. Then the market went bullish to the upside, indicating, telling us, literally the market is communicating to us that we have built liquidity below these lows. That's the important part here. Following that, you can see we took out that low, which again, then respect the lows and went bullish. Perfect. But we took out that low. Why is that important? Induces sellers. Anybody selling this market will look to sell in these regions up here. They get trapped. But now this is a lesson for everybody here. A lot of the uninformed traders, you guys would be looking to take a sell right here, but that's not correct. Why? Remember that internal liquidity we marked on to the left-hand side over here? Look at these lows, or sorry, look at these highs, I should say. I'm going to drag this over. Look at this. Boom. We end up hunting for that internal liquidity point. So don't make the mistake of looking for shorts up here when we still have liquidity to the left-hand side. You want to be starting to look for shorts in these regions up here. Don't just force that short. Don't be a pattern trader. Just because we took out this high does not mean we need to be looking for sells right away. No, that would be right here. You need to make sure that that internal liquidity is taken as well. That would be up here. And then in the chart example, up there. Okay, let's clear these markings. Then we grab that internal liquidity point we've been talking about. Remember, the market purposely engineered it in the past for us to now run it in the future. We get a reaction down, pull back to the extreme, maybe a possible sell entry up here. It is out of my time window though, so I was not taking this. Then we get a big, look at this, volume move to the downside, trapping buyers, but not only trapping buyers. So we trap buyers here, yes. Okay. Again, why do we trap buyers? We'll mark it out just to make sure everybody can see it as clearly as possible. This is a BOS for retail, and people are going to be buying at these lows. Once we trade below them, we understand buyers are trapped, and we're also inducing sellers by that. Okay, that's very, very important. If you guys aren't familiar with that, please go look at the liquidity inducement series I've been making on the channel. That'll clear some things up for you guys. All right. So following that run on that low, okay, I'm going to drag this over to the left. We then run bullish. Remember, we induce sellers, right? So where are sellers looking to take this thing lower? At the highs. Look how we even get a reaction. This is all done on purpose. Okay, so we get that reaction at the high. We allow sellers to get in the market. Okay, then it pushes up and traps. There you go. Now sellers are trapped. This is when you want to start looking for sells back down. This is when you want to start looking for sells back down to the downside. We have liquidity built all the way at the lows. We'll drag this over. Sellers have now been trapped. Okay, on this current picture, this current story that we're building right now. Remember, look, from high to low, we take out this low, inducing sellers, which means liquidity above this high. We trap them, and look at the market give you that relief to the downside. Now let's continue on with this price action. We take out this high. So remember, this is going to be a trap. Look what the market does. It gives us a temporary reaction. Check this out. So mark on that low. We're building liquidity at it on a lower time frame perspective. Okay, now we're going to hop in the 5-minute. Watch this. We tap into this red box area, otherwise known as a trap area. Price comes up, prints this high, respecting a high to the left. Once, twice, sell off. What does that do? Induces sellers. Where are sellers going to be entering? Up here. Look at us engineering liquidity here. This is a sell-off that takes out a low to induce sellers. We do not sell from here. We allow the market to react though, to build liquidity for us. I need you guys to pay attention here. This is very important stuff. We allow the market to react here for liquidity to get built for us. Then we get another sell-off to the downside. Look at this. This is the most important thing you need to be looking at right now. Once, twice, respecting the low to the left, building liquidity to the downside. Then we get another move to the upside, that false move that we always talk about. Boom, trapping sellers. This calls for a sell right here. And you have very obvious amount of liquidity to the downside. That would be used as a target, a partial point, however you like to trade. This was market open and there was a little bit of a gap, so it looks ugly, but to clean this up for you, low taken, high taken, liquidity block. And if I can draw it in a diagram just to clean it up for you, look, low taken, high taken, liquidity block. All right. Now I know, bear with me, there's a little bit of a gap, and again, that's because of market open, but I've dissected it as much as possible. We take out these lows from the left-hand side. That's fine. Look at the market hunt for them swiftly. Okay. Don't forget, look at the left. We've been talking about these lows for a while now. Okay. We're going to get to this big move in a second here, but I want to break down this whole lower time frame. So check this out. This is an Asia session. We build some equal highs. The market sells off to the downside, inducing sellers again. Price pulls back into this area. Reaction to the downside, sells off again, inducing sellers once more. Now, if I drag this red box over, look at this. The market simply reacts off liquidity. It builds even more liquidity. This is all done on purpose. This is where you guys might get psyched out. You have to trust yourself. You have to understand that the market will react off liquidity sometimes just to build it. Example being right here. This high respects all these equals to the left-hand side. And again, induces lower once more. This is a massive call for shorts above this high, and you have a liquidity block supporting it right above. Look at this. Drag this over. The market runs bullish to trap the sellers, but not only trap the sellers, to induce buyers, which means trap area to the bottom, trap area at the lows, I should say. After running these highs, trapping the sellers, this is a call for a short right here. And if we dissect this price action, there was actually multiple entries. And watch this. This is textbook stuff. I'm not going to lie to you. So we get another sell off to the downside here. All right. Low, high, low. Okay. Common retail pattern where sellers interested in taking this thing lower right here at this high. We understand that we reacted off it once, twice, building liquidity at that high. Grab this high, drag it over. Check that out. High ran. Then we get a reaction lower, pullback. This calls for a short. Okay. If you miss this, no problem. Look what we do again. We induce sellers here, right? Where they want to be selling from at this point here in this red box. This is going to be an area sellers want to take price lower. And what do? We trap them. Another entry for a short. This was actually in my time window. Would be an entry I would take. How would I enter it? Just like this. Wait for the liquidity to get taken, aka the high gets ran. Stop loss, you can just cover the whole high to be safe, no worries. And then target one would be here. Why? Buyer liquidity. We take out highs, buyers are induced to the low. This would be a valid area to target. And then of course our higher time frame target to the left-hand side, just like that. All right, now look at this whole markup we have now. All right, from what it looked like before to what it looks like now. Simply following the narrative all the way along. Lots and lots of gems in this video. I hope you guys enjoyed this one. This video is going to be a good one, so please sit back, get those notepads out, and take some notes, all right? So today we have NQ, and we're going to stay on the 15-minute time frame, okay? Remember, the sole purpose of these videos, I'm sounding like a broken record, but it's to train those eyes as much as possible, okay? The only way to do that is repetition. So that's why I make all these videos. That's why there's so many videos in this series, right? Because we're doing these things over and over and over to train those eyes. We're going to stay on the 15-minute time frame here. Couple things to talk about. Starting off from the left-hand side, we're going to follow along with this price action. You can see here we had this big bullish move, clearing any liquidity at these highs, followed by a sell-off. Price ends up kind of consolidating for a little bit here, takes out a high, and then we get a big sell-off to the downside, clearing a low. And as you guys can see, from that point, we moved bullish, and we moved bullish quite a bit, okay, printing this high in the market. Following along, we go lower, respect structure a bit. What do I mean by that? You can see how this induces buyers into the market. So then you have buyers interested in taking positions in these regions. There's reactions, and then price goes bullish, and then keep an eye on this high right here. Why did this high print, this wick here? It simply tapped into this high to the left-hand side. This is how simple things can be. Now, we do not predict that there's going to be liquidity above this high. No, we simply let the market communicate that to us. And what happened here? This high, if you look to the left-hand side, it respected this high from the left. What does that tell us? We have built liquidity at this high. And we didn't just guess, right? We're not marking this high out guessing. And what we're going to do is we're going to plot a blue line here too. We're not guessing that there's liquidity above this high. No, we let the market communicate that for us. And that is very, very important. Now, following the back of that, this gives us a reason for us to trade higher one day into these highs. There's logic, there's reasoning. From that point, we sell off to the downside. We take out this low, which is fine. And then we range, and we range for quite a bit. Look at this price action we get here. This is actually almost 2 days of price action. And if we can mark it all out, you can see how The market prints this low in the market, then we move higher, inducing buyers by taking out this high. Look how the market came down, respected the low. Look at this wick here. Respected the low, building liquidity below this low. Then the market sold back off and took out the low. This is very, very important. So listen up and listen closely. If we back up a little bit and we ask ourselves, why did this low in the market print right here? Okay, why did this low print? And we have to look to the left-hand side and see what it reacted off of. Right away, I can see that price has tapped into this low and respected it. Same concept as this. This high respected this high. Okay, now this low has respected this low. It's very simple, very straightforward. So what can we do now that it's tapped into it and we've gone bullish? There's going to be liquidity below that low. Now check this out. When price sells back off, clears liquidity from this low, but yet it does not take out 25,551, what we have done is left liquidity at the lows, and we have to keep an eye on that, because remember, our edge in the market is to buy once buyers are taken out. Now ask yourself this, has buyers been taken out if we just stayed above that low? No, they have not. I view all of this price action right here to be a trap. You want to avoid trading this price action because we are still trading above lows. Again, if I drag this red box, maybe it brings a little more clarity for you guys. You can see how we have respected it once and twice, and we've went bullish once again. And check this out. We took out this high. Again, this induces buyers into the market. So this is all going to be a trap. Hope you guys are starting to see this over and over. Look what the market does once again. We induce higher, price sells off, but still yet we're still respecting the low. So all of this above this low is going to be liquidity. Now this is very, very important because this right here teaches you guys when to stay out of the market. And it's very simple. An easy rule to set for you guys in this specific circumstance is all you would have to do is identify where we are building liquidity in the market. It's very easy to say that this low right here is building liquidity in the market. Okay, so we mark it out. Again, 25,551. Any moves, any longs above it should be a trap. And I call that engineered liquidity. When I identified this in real time, I said to myself, it's very easy. It's very straightforward. If price comes below, and remember what I said, if price comes below, because it doesn't have to. This is not 100%. And this is something you guys need to understand. If price comes below, now I can look for a buy opportunity. And that perspective is so powerful because you'll stop caring about every little move that's going on in the market. Again, you've identified your liquidity. You want to see price below it. If it goes below, sure, there's a buy opportunity. Other things to talk about here. Yes, we have identified liquidity to the downside that we want to long below. Coincidence, what do we have right below that? A liquidity block. What is the logic behind a liquidity block? Now, not every liquidity block is going to work. Again, nothing is 100% in any strategy out there. But the logic behind our liquidity block is price printed this wick, taking out previous lows. Now, the logic is there's no liquidity below this low. So if the market comes down, runs this low, where are we going to put our stop loss? Look at my crosshair on the left-hand side. We are going to tuck it right below the liquidity block, just like this. As simple as this. Now, if we get tagged in here, you have first target, these highs. If you look at price action right now, I'm using the replay tool to kind of emulate live time as much as possible. You can see how we are building at the highs here. There's that logic. There's that reasoning. Very important. We aren't trading patterns here. We need to understand that we need to look for logic. Yes, we're looking for a long, but why are we looking for a long? Is there highs intact? Right? Is there a reason for us to push higher? And that's what you need to be asking yourself. So if we leave these highs intact, look, great first target. And then don't forget where we built on the higher time frames. Look at these highs, another great target. So I'm using these two blue lines for reference, okay, that we can target these highs. This low, remember, we want to long below it. Let's see what price does here. Okay, so there we go. Price tags us into a T. It comes a little bit in drawdown. And if I actually remove this tool, I'm going to show you guys something a little powerful here. And we're going to zoom in. Look at my crosshair. Right here, it's 10:45 a.m. What happens at 11 a.m.? We get an hourly closure. So look at this. Price is moving bearish through 10 o'clock. As soon as 11 o'clock opens up the new hourly candle, we stab out previous hourly low. And now the bullish move starts occurring. Where's our entry? Our entry is below this blue line. Let's plot it on again. So there's our entry. Stop loss, look at our crosshair, goes below the low to the left-hand side. That's always going to stay the same. Maybe if you guys want to do a partial point, that's a valid partial point right there. And then of course you have the highs as well. So just like this, let's see what occurs. This is actually very important, okay? And I get this question a lot. I'm going to delete the buy tool just for now to clear up the chart. But everyone always says, oh, Marco, what time frames do you use for this? What time frames do you use for that? Check this out. It's very simple, but so powerful. I think we can all agree, if you look at this price action right here, it's very squeezed up, okay? Very bunched. It's hard to understand what's going on. So go to a lower time frame. That's all I do. Now look, on the 5 minute, it makes more sense. Look what we've done. We've taken out a high. Price comes down. This low respects this low. So what has that done? It's built liquidity at the low. So plot a blue line here. That identifies for us that we have liquidity below this low at 25,610. What a coincidence again. Check this out. We have a liquidity block below. Would you look at that? A possible scaling opportunity. Entry would be at the low, stop loss below the liquidity block. And in this example, I would not be partialing at this high. Why? Because it's only a 1 to 1.6. So what I would do is as soon as this high is taken, I BE my entry. That's fine. And then I'd hold to my actual full target being up at the highs. So I'm going to plot on both buy tools. You have the extreme entry being down here. Perfect. And a confirmation based entry that's taken off the 5 minute chart is right here. Okay. So look what we do. We build liquidity again at 25,610. Price comes down and tags us in. So I'm going to move this tool over. There we go. We're tagged in our second entry. Remember, we need logic. Why are we going up? Now, we can all agree that we see some form of liquidity to the upside. We see sellers left in the market to the upside. So we want to target that. Okay. There's our logic. There's our reasoning. This is not a pattern. Okay. You guys need to understand that. Forget that pattern perspective. That's not what we're doing here. You need to understand the foundation, the logic behind these moves. Extreme entry tagged in. Now we have our pullback entry tagged in. Let's see how this plays out. And boom, just like that. Partial point, first hit here at 25,745. And now we're hunting for that higher time frame target. Let's play it out. And boom, just like that. Okay, clockwork. I hope you guys are starting to see the similarities between these entries and previous entries I've shown you in the past, okay? Remember, don't take them, hold them side by side and look at them from like a pattern perspective. No, you need to understand the logic behind these charts, what I just took you through for the last 10, 12 minutes, okay? I hope you guys enjoyed this breakdown here. We are gonna be on gold, like we said, starting on the 1 hour time frame. We're just gonna mark on everything we see here so far. So right away we can see we had a big sell-off on this specific day here. Okay, now you gotta understand that this big sell-off in the market from, let me circle on this high to low, induces sellers into the market. Very important to identify that. What you can do is you can actually grab a red box, that's what I like to do, keep it as organized as possible, and draw it at the high. And we're gonna be identifying this whole area, this whole level, POI, whatever you wanna call it, as a trap, okay? Understanding that sellers are looking to take entries in and around this red area. And look what happens. Once we take the low, we trade higher back into the highs, okay? And look how price respects it multiple times. And then we get a sell-off right back down to the low, and big surprise, we actually respect the low. And why do we do that? Well, we ran a level of liquidity here, right? So ask yourself this, why would we have a reason to run this low? We don't, and that's why it is respected, otherwise known as a liquidity block. And from there, we trade away. Remember, we have a reason to push up to these highs. So what we can do is drag a blue line on there. Keep an eye on 43.53.5. Look how every single time we trade back into the highs, once, twice, 3 times, the market gives us a false reaction back down, simply building liquidity at the highs for us. Okay, again, very important to identify these kind of things. Now, let's hop into the 15-minute time frame here. Now that we've opened up the 1 hour and we can see more PA on the 15-minute time frame now, we can start identifying what's actually going on here. Look how we come back into the highs again. We can actually even drag this red box over to show you guys where sellers are entering positions. Here, and all the way up at the highs here. Every reaction down, understand this, high, to low, high to low, and another again, high to low. This is simply, all of these reactions are building liquidity above these highs. That's what you want to see, because now we have logic, we have reasoning for price to move to the upside. What can we see if we zoom into current PA? All right, so after respecting the high, we sold off all the way to the downside. Look at this move that happened right at New York Open. Two 15-minute candles, big, massive move, okay? Now the intention behind this move is to induce early buyers. Since we have taken out these highs here, you could even mark on these ones over here, buyers are going to be identifying that as a BOS in the market. We want to wait for price to trade below the low now. So look how I've drawn a red box here as well. Hope all of you guys are starting to see this more and more on your own. So red box down here, we have to view this as a trap. So if the market comes down and respects it, deem it to be false and overall should continue lower. Now, what you want to be able to identify is, where did this reaction come from? Okay, so if you follow my cursor and go to the left, you can see that the market has a liquidity block right down here. Remember what we talked about liquidity blocks before. We ran a level of liquidity, leaving a liquidity block for us. Understand this. Why would price need to run this low now? We're viewing this low to have no liquidity below it. Okay, so essentially, if the market comes into this area, okay, you want to anticipate reactions out of it. If you actually, and we can talk about this actually, like if you were trading this in live time. Now, if you actually entered in here, okay, what you need to understand is your stop loss is the most important part here. Okay, it needs to remain below the liquidity block. Do not get excited. Look how the market rapidly moves up here. A lot of people are going to roll their stop losses too early, right below this low. And you're doing that based off emotion, forcing a break even, forcing a trade management. Understand that if we get this move up and take out these highs, now the market can easily come back down to this low. How do we take advantage of this? Well, now that we understand that buyers are induced here, okay, early buyers. If we want to buy this asset, we want to take entries after the early buyers are trapped. So if we play price out here, remember, we want to see price below the low. Look at this sell-off. Okay, this is not a coincidence. This happens on purpose. And it comes actually into the extreme of the LB. So if I drag this over, grab the last low before the LB to the downside here, look at that. Traps the buyer. So anybody buying above this low, they have been trapped. Okay, so they've been induced by this big buy move, early buy move, and then boom, trapped. Now that that's occurred, we are trading in a liquidity block, boom. This is when we want to buy. Stop loss below the low to the left. I can't stress how important this is. It needs to be below LBs and above LBs. Trust these highs and trust these lows, okay? In this example here, the low, since we are buying, entry like this, target, simple one back at the highs. I think we can all agree why. Look at the buildup we have back at the highs, okay? Super, super clean. And if we zoom back into current price action, we'll manage this on the 5-minute time frame. Now, if we analyze this asset right now, if we analyze gold on the 5-minute time frame, look at the candle, this 5-minute candle coming down. This is going to induce so many sellers back into the market. The momentum down, breaking these lows, the volume is so high, right? So think about this. In live time, retail traders that are analyzing these charts, they're going to get induced to sell once this move occurs. So same thing. We take out this low, we're going to mark out this high. And if any reactions come from this high, we'll change it to red. Any reactions come out of this high, deem them to be false, a trap, just like the other red boxes we've drawn on. We get the entry and look at that reaction out, okay? Sharp move down to induce sellers. Boom, that is where we are entering positions. Stop loss below the liquidity block always. And now we enjoy the ride back up to the upside. And something else we can touch on quick before we continue playing this trade out is, look how we anticipated reactions in this area. Now, why did we do that? Same thing, right? The market takes out this low. So retail is going to deem this to be a BOS. And now that we understand that, where are sellers looking to enter? Boom, right in here. And the market gives a short-term reaction to the downside from high to low. Overall, you want to see that continuation back up. So if I drag that tool back on, and we're going to play it out now, we stall at the high for a little bit longer, and boom, clockwork. Look at that. So we induce sellers, and then that's when we look to buy, and we buy into the seller liquidity, just like that. So we're on Aussie dollar on the hourly time frame right now. Let's zoom out actually a little bit so we can get an idea of what's going on the higher time frames. Right away, what can we see in kind of relevant slash current PA here? I'll draw on this red box, drag it over. We can see that we've had a clear buildup at the highs. What do I mean by that? This red area, this level that we've marked on, we can clearly identify sellers have entered here and pushed price to the downside. Very important. As you guys can probably see some previous videos, that tells us there is reason, there is logic for us to move back to the upside. So we plotted this blue line here around the whole number of 0.67, and that's basically identifying that we have liquidity up at the highs. Hopping into the hourly time frame, what can we see? So we've kind of opened up the 4 hour here onto the hourly chart, and we can see that we've had this sell-off. Now, look what we've done to the left-hand side. We have ran a whole bunch of liquidity. What do I mean by that? We can all agree that if I even draw, you can draw a trend line here, however you want to identify it. Look at this. The amount of buyers that were trying to enter the market in these levels here. Maybe that's in here or over here. And if I adjust this a bit, you can even argue these lows here respecting this area. So nonetheless, we are building a lot of liquidity at the lows here. In other words, buyers have stepped in here, 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 all right? Look at all of these areas, if I circle them for you. Now, when the market sells off to take out the buyers, remember, now that's our sign that we want to start looking for longs. If we also analyze price action on the opposite side, look at this. All I have to do is draw this little trend line on. We can all agree we are actually building liquidity to the upside as well, which is perfect. We want to see that because now we're not just buying because the lows are taken. We're buying because yes, there's liquidity taken at the lows, but now we have reason for price to push back up to the highs, right? There's liquidity there for us, so we target it. Opening this price action up onto the 15-minute time frame, what can we see? Okay, now if we were all looking at this PA in live time, look, this was printed in Asia session around 12:45, 1 a.m. Price went long, approached back at the low, and we respected this low many times. Look at this. This is a 15-minute time frame. Down here once, twice, 3 times, 4 times, and look at this move that occurred at New York Open. Big bullish move to the upside, leaving liquidity at the lows, okay? Very, very important. And wow, would you look at that? What a coincidence. We have a liquidity block laying right below. Remember, what is a liquidity block for us? It's essentially a level that we're going to be placing our stop loss. In this example, we're going to be placing our stop loss below this low, okay? Essentially predicting, assuming that there is no liquidity below this low, so we don't have reason to push below this low. Look how price sells off down to the low, and look at this. So if you didn't identify this, and this is going to actually probably clear a lot of issues up for a select few of people watching this video right now. If you didn't mark on this low, and maybe you grabbed, I don't know, this low down here, you're going to start getting induced into this move if you didn't identify the liquidity properly. Look at the difference between marking this low when you still have lows to the left, and then if you mark on this low. Would you guys want to be a buyer below this one or this one? I hope everyone's answer is below this low, because you can all agree, if I even drag this red box on, it'll make even more sense for you guys. Look at that. You have buyers stepping in this area, and then you have this low down here where they are going to be placing their stop loss, just like this. So we want to be buying once all the liquidity is taken. These lows getting taken right here is not all the liquidity taken. Okay, so if I play price out, look how price even screws around to induce even more buyers. Check this out. We mark on this high, drag it over. That is a BOS for retail, right? So we can mark that on here. Where are they going to want to buy from? We have an area here and also an area down at the low. Okay, so every single time we take out another high, we are simply inducing more buyers. But we know that we need to wait for this low to get taken before we want to enter the market. We have this low marked out. We need to stay patient and wait for the market to hunt for it. Look how choppy it gets, and look at this. This is something else you guys need to be able to identify in live time. Liquidity building for us to buy into, right? And then finally, the low is taken. Boom. How do we enter? We don't need the imbalance. We don't need the exact bottom, none of that stuff. We want to enter as soon as the liquidity is taken, which is basically this low from the left-hand side here. Entry, stop loss, as you guys know, always below the low to the left, which is right here. Okay, so the stop loss covers this low. And now we can simply start looking for targets. And if you zoom out, I hope everyone sees what I'm seeing here. Remember this high we plotted on from the very beginning in this video, 0.67 flat. This move, again, from high to low, gives us reason for price to push back up to the upside. I hope you guys can all see what I'm seeing here and agree that we can target all the way back at the highs, just like that. Now, if you want to partial on the way up due to some comfortability, making sure you want to secure some money, that's completely fine. Do what you're comfortable doing. So whether that's maybe partials, I don't know, you can mark on internal points, maybe this high over here, or you want to mark on this external high right here. That's completely fine. Everyone is different. So if I'm comfortable to hold full volume to full target, maybe someone else isn't. So do what you're comfortable with, okay? Manage the trade according to your own comfortability. We are in Aussie here, and again, remember, stop loss always below this low. This doesn't change, okay? We're only ever gonna touch the stop loss once the trade just starts moving in the intended direction, and like a good bit as well, not just a couple pips. Now, if I play this out, boom. So now that we've moved up to the upside, look, partial point hit for some people. This is definitely like, you wanna be risk-free, okay? Because you gotta think about it like this. Do you want price all the way back down to your entry? And do you still wanna be in that trade? I hope the answer is no here. Cool, so we're in profit here. Full target is around a 1 to 11. These kind of trades don't come around too often, but when they do, you guys need to be taking advantage of these. And overall, we get that continuation all the way back up to the highs. So you have one partial hit if you wanted to close something there. You have another one hit here. And then finally, big coincidence, we have ran for the full target back up at the highs where sellers were entering from. Okay, and I can even plot it like this to show you guys. If they're entering positions up here, where's their stop loss going to be? Tucked right above the high. And would you look at that? Our buy hunted that liquidity perfectly. Guys, we're going to be on the daily time frame for this whole video, because there is so much to cover in this price action. Okay, again, putting all of these concepts together and training those eyes to see the system in live time over and over and over and over. Okay, the only way you can do that, again, is by training the eyes. So that's why we make these videos for you. So what can we see so far on pound? The market found some sort of top here, all right? And then we had a sell-off, taking out some sort of low, pullback, and continuation down. As of right now, I really don't see too much. We can argue and say we have a internal high left up here, maybe some form of liquidity left. Other than that, nothing really too interesting yet. So when you don't see liquidity, what do? Quite simple, we wait. Okay, perfect. So what has now happened? We got a reaction out of this low. Look to the left-hand side. Where did the reaction come from? We respected this low and went long. So now we have a future, you could say, target, or just a level eventually price is going to run back to, because now this low has respected this low. Price has communicated to us this is going to be a future level of liquidity. Use it to your advantage. Now, we end up taking out this high here. Look at the pullback we get. Overall, continuation higher. Now, this is very important. Look at this internal liquidity point we took out. This induces buyers. I'm going to mark this on here for you guys. Here we have a BOS. So this, again, induces, entices, whatever you want to call it. Buyers want to step into this market, okay? We understand. Look where we went long off of. Absolutely nothing. We just respected this low here and went long and built liquidity. So now you ideally want to see price back down to these lows. Now that we've taken out all of the liquidity to the upside, you can anticipate a reaction back down. So let's see what happens with price here. And also, let's mark on this. We don't want to forget this. If we get any reactions in here, deem them to be false, a trap. Why? BOS to upside. This is going to be an area typically buyers want to be buying from. We do not want to be buying from there. And the market actually ends up hunting for it right away. It actually respects it temporarily. You can see right here, we tap into the area, short-term reaction, then overall continuation. But again, in area, we anticipated reactions, and the market actually gave us for 2 days. We went bullish, and then that continuation came down and trapped those buyers out. Since then, we get a move higher. Why did we get that move higher? This low tapped into this low, right? Built liquidity. So then we take it out and we're getting that move right now. It doesn't mean we're gonna move all the way back up to the upside. That's not what I'm saying. I'm saying that this was a level of liquidity. We took it and we're getting a reaction. Okay, now let's continue on. A couple things to point out now, which is definitely things you guys need to be identifying on your own. All right, so look, remember we tapped into this trap area, reaction, continuation. Then we took the lows, we had some short-term bullish movement, respected the highs, all right, and then sold off again. Why is that important? Sellers are in here and have built liquidity for us, so we need to mark that on. This is a simple level of liquidity. We talk about it all the time. Low taken, price comes back up to the highs, respects it, moves away. This is gonna be a level of liquidity. We mark on this high, we drag it over. We understand it's gonna be used as maybe a target, or we sell after it's taken. Look what happens after this again. Price sells off, takes out another low. Why is this important? This induces sellers. So BOS for retail, they're going to be entering more sell positions up here. Every single time we react off these kind of areas and push down, this is not moves we want to be involved in, guys. We do not want to be taking these entries. However, you want to see it occur because this is now a confluence for us to push higher. Now we have logic. If we're looking to buy this asset, here's the confluences. It's like price is leaving breadcrumbs, hints for us. Now, if we continue on, price ends up running for the lows we have been talking about. If we can quickly summarize everything that's gone on, again, to train those eyes as much as possible here. Price builds liquidity at the lows. We go long. We take out this high, which actually induces buyers. So we can mark this on as well, just so we make sure we have everything marked on for you guys. Perfect. So we take out that high, pull back. Continuation, taking out these highs from the left-hand side, inducing more buyers. Your eyes need to be glued to these lows down here at 1.3139. Before we make it there, just like we spoke about before, look how we build all of this internal liquidity. This price action is so simple to dissect. That's all it is, right? You can call it like an order flow. It's like structure liquidity to me. High, respecting high, high, respecting this high. So all of this is liquidity. So this is gonna be a gorgeous partial point in the future. You wanna be targeting this. Now that we have taken out these lows, I'm not going to be going through entries in this video. I just want to train your eyes as much as possible. We're not going to be talking about buy entries or sell entries, purely just direction and bias in the market. Now that we have taken out these lows, guys, your eyes have to glue towards these highs here. This is the next point of liquidity. Now, you'd be looking for buys back up into it, okay? However it's delivered. Maybe we get something like this. You can take that buy. Maybe there's pullbacks on the way up, and you continuously buy until these highs are taken. Understand that after these highs are taken, we have some sort of a liquidity block here. Why is this a liquidity block? You can see how price ran a level of liquidity and we had a sharp move to the downside. So we're not really viewing this high to hold any liquidity yet. So you can definitely anticipate and expect some sort of reactions from this area. But overall, again, I want you guys to train those eyes to see these levels as best as possible. We stab the lows, we trap the buyers. Anybody that was buying above 1.3139, they have now been liquidated. They've been trapped. This is when we want to step in. This is when we want to start buying this market. And you can see, if I remove this blue line, we'll replace it with a black one to clean the chart up. And just for the sake of the video, we're not really going to go into lower time frames because that's not what the purpose of this video is. But look at this. We can see how buyers were induced here. And then we can see how buyers got trapped. You have a form of a liquidity block right below. Price tapped into it. So there could be possible longs. Again, we're not going to go into lower time frames. It's not the purpose of this video. Maybe you guys can go and back test on your own. That's fine. But we tap into it and look at this. We go long. Again, eyes are going to be glued to these highs up here. This is price action you want to see. Look how price right here, these highs come up and we respect the liquidity and give us a sell-off. You want to be buying this asset back up. Deem this pullback right here from high to low. It's going to be false and it's going to be short-lived. You want to buy this thing back up into this engineered liquidity, okay? It's a gorgeous target. And boom, just like that. So we kind of hang around down here in this imbalance, and then you get that one bullish candle, boom, right to the high. So if we zoom out, look at everything that we broke down, how it all happened. We induce buyers, we trap them all. Now you're looking for your buy entries and you are hunting a level of liquidity on the other side of the market. Clean stuff here on Pound.
So we're going to be hopping on to NQ.
And remember, rinse and repeat now, but the sole purpose of this series, these episodes, again, is to train those eyes as much as possible, right? So we're going to cover all of the concepts. We're going to track price action together. And for this specific episode, we're going to use the replay mode and emulate live time as much as possible so I can show you guys the importance of reacting to what price is giving us. With what we have been delivered in front of us right now, we can kind of break this down and show you guys what's been going on. But nonetheless, we have ran internal highs on the left-hand side. After inducing lower, you get a move higher to trap those sellers out. And then boom, we have that move to the downside, okay, after grabbing this high. And from that point, we move bearish to the downside. And then for around roughly an hour and a half, look what price does down here. So we simply kind of build in this channel, chop around, I guess, channel, range, whatever you want to call it. Nonetheless, we are building liquidity down here. And then price ever so slightly, nothing too crazy, but ever so slightly, we take the lows out, and from there we move bullish. Okay, after that, that's all I see. That's all I see. So I'm going to need to see what price action does in order for me to build a story. As of right now, this is all we see. So we've tracked price to live time. Again, built, moved away. Okay, we have some form of an LB here. It's possible that we can just run for the highs, or we hold the high and sell off to the downside. So we need to see what price does up here. Okay, and we're going to react accordingly. From this moment, price ends up taking the lows. We're going to mark this on because it's important. Since we have taken the lows, sellers are induced. Therefore, we're going to have people selling below this high. Perfect. So you're going to want to wait till this high gets taken out. Okay, so sellers induced. Perfect. And if we go a couple more candles, boom, sellers have been trapped. So let's mark this on here. So sellers have been trapped there. From this point, it's possible price can start breaking down to the downside. Okay, we also have an LB on the left-hand side. So it's possible we can actually just take that seller liquidity. Why is there liquidity there? Again, inducing, trapping. This high we're printing right now, it could go higher, but whatever high we end up printing in this area could supply us with that move back to the downside. And again, we have this LB as a confirmation. If you're not confident in taking this entry right here, all you have to do is simply wait, right? Wait for another entry to build, some sort of a confirmation-based entry. A couple things to talk about in this price action. So the overall swing point could be printing. Remember we talked about it could go a little bit higher, but we could be seeing that print right now, all right? That overall, we're on the 1 minute time frame here. So this could be like a high on like the 1530, right? You guys see where I'm going with this. After we start printing this high, look what price starts doing. We break down and then we print a little bit of an internal high here. We take the low. This is going to be an area sellers want to take entries from. So boom, price comes in, respects it, moves away. We now understand liquidity up here, 24,836. Nothing too complicated about that. All right, and from there, we sell off to the downside. Remember, we have built liquidity at the lows. How so? Look at this price action, this channel. We're basically viewing this move to be false to the upside. But what's also occurred is we have taken out the lows, which tells me this could be a region price could respect for a little bit. Why? Because we have taken out a form of liquidity down here. This could be used as an LB, a liquidity block. So price taps in, and now we're moving bullish to the upside. So what's that telling me is we're starting to build even more liquidity. Now, if we continue with price, look what we hunt. Remember this internal liquidity we left before. What do we have right above? An LB. Why is this viewed as an LB? Price stabbed out previous highs, and then we had a reaction to the downside, built and moved away. So we have left a form of liquidity. Therefore, entry number one could be just like this. And you guys need to understand the purpose of this. Look what we've done down here. Don't forget, we have built liquidity. So what we can do is actually, we'll mark this on to train your eyes to see these things more often. But we built liquidity down here, right? Buyers stepped in here. Now we have liquidity to the downside. After taking out these highs, understand what? Early sellers, remember, sellers entering here, price move to the downside, early sellers will be trapped once you take out that point, this internal liquidity point. And of course, we tuck our stop losses above this high, which is known as our liquidity block. And price ends up running for the highs, and boom, you get tagged in your entry. So we've talked about the entry. We've talked about the stop loss. Where can we target? An easy target, where you can even just partial at, would be right here. We can all agree. Why? form of liquidity, right? Overall price can move to the downside, of course, but we can also see maybe a little bit of a reaction there. We haven't tapped into these imbalances yet. Okay, remember this area can be acting as an LB. Okay, so we could build more liquidity. These are things you want to be aware of, things you want to anticipate, because when they occur, you won't be surprised. Okay, I hope that's making sense to you guys. We get that reaction to the downside. Now, if I, just for the time being, I remove the sell tool so we can talk about this price action as clearly as possible, we have left internal highs right here. Now, this is the 1 minute chart, so it might be hard for you guys to understand, but this price action is actually the exact same as this price action here. It's just squeezed up a little bit. So this PA right here is simply just that high, respecting high, leaving internal highs intact, okay? Which would be right there. And then of course you have your imbalances right above and a liquidity block. Okay, so it's literally the exact same as this. So possible entry number 1, look at the arrow. Possible entry number 2, now watch this. Possible entry number 3. And let's drag this over. Look at this reaction at the low. So what we can do is to train those eyes. This is going to be known as engineered liquidity. And this is going to be known as engineered liquidity. And here is entry opportunity number 3. Look at the similarities between all of these entries. And I'm going to remove these horizontal rays and just put a line to clear things up as much as possible. Entry here, Y, look to the left. LB. Entry number 2 here, Y. You have your LB. Entry number 3 here, Y. Here's your LB. So these, all 3 of these entries, repeatable in the exact same thing over and over and over. Build, entry. Build, entry. Build, entry. And every single time, look what we were doing at the lows. We were building liquidity at the lows. So there's your logic. There's your reasoning for price to move lower. And sure enough, price moves swiftly to the downside, delivering some clean price action. And if we just put on, we're going to slap on some sell tools here to show you guys just the opportunity. Showing you even just to this, I think we moved even lower than this afterwards, but just to this point right here. Okay, so entry number 1, over a 1 to 4. Entry number 2, over a 1 to 8. Entry number 3, over a 1 to 8. And yes, this is all the way to the lows, but even if you back it up to this low over here, 1 to 3, 1 to 5.7, and 1 to 5.2. Beautiful, beautiful price action delivered. And we've dissected this to a T, making sure you guys understand each and every single entry, not even just the entries, but the picture, the storyline. Okay, I hope you guys enjoyed this.
What's going on, guys? Welcome back to another inter-equity trading video. So we got a lot of feedback, a lot of good feedback on the previous episode of Training the Eyes. So it was inevitable. We have to make an episode 2 and continuing on going forward. You guys have gained a lot of value on it from what I've heard. So without further ado, let's hop right into the charts. All right, so here we are on the gold chart for today. We are on the 15-minute time frame, and to be honest with you, we're only going to stay on this time frame right now because this shows everything clearly. Okay, so the first thing we want to do is find liquidity, mark out specific areas on our chart, and follow along so we can build that story, build that narrative. So what can I see? We can see price went bullish. Okay, this is on a Tuesday through Tuesday night into Wednesday, taking out a high from the left-hand side. Okay, and you can see following that, this on the 15-minute time frame, so it takes a little bit of time. Okay, but we trade a higher a little bit after taking out this high here, and then we get that sell-off to the downside. Okay, taking out these lows. Perfect. From there, we go short, and then we print another high, taking out some internal highs over here, and then big sell-off. Look at the volume in this sell-off. Okay, keep an eye on that because we're going to come back to that in a moment here. But remember what we did over here. So we took out this high. Now, why is that important? Why is that relevant for us? I'm going to mark this on as a BOS, okay? Because again, buyers are going to view this as a market structure shift, a BOS. So now when we come back into these regions here, anywhere in these imbalances, they're going to be looking for longs. So maybe you had buyers looking for longs in here, okay? Price went in their favor, then trap them, okay? And then here, same thing.
we get reactions, and then price went in their favor, right? So let's mark this out here. I grabbed this imbalance, this whole candle, this whole area over here. Basically, if you went into a higher time frame, it's probably like an order block or a POI retail would see. But then look at that reaction we get. Okay, so a lot of volume to the downside to induce sellers. Okay, and then buyers are entering positions here. We want to see this occur. Okay, we want to see this move to the upside, taking out this high here, which again, retail is going to view this as a BOS in the market for them. Okay, now, since they view this as a BOS, same thing applies. They're going to want to buy. Retail is going to buy. I always say they're going to buy, but I'm just viewing it as like a retail perspective. They're going to be buying in these regions down here. Okay, the extreme or any of these imbalances over here, you can see we get some short-term reactions. Okay, and then at the low, look what happens here. Same thing, but just on a smaller perspective. Price trades below the low, then price trades below the high. Okay, again, retail is going to view that as a break in the market structure shift. So again, more buyers are going to be entering down here at this red box. Overall, if you just follow my crosshair, okay, into this low over here, remember, reactions. So we're building liquidity over here, right? But then look to the left. Where did this reaction come from? This low. Continuously follow to the left-hand side. We have been reacting in this POI the whole time, okay? Don't forget, this is where this whole move started from, okay? This whole trap, you could say, from low to high. Again, taking out that high, which induces buyers, right? But again, you always want to kind of track where all that liquidity is lying. So boom, below that low. So let's mark out this low over here, okay? And coincidence, look what we have right below. An area of interest. Why is this an area of interest? Since you can see I just marked on this low over here, okay? We swept that previous low out and we went long, okay? Which tells me we don't have any liquidity below this low, okay? So I can mark this on just like this. And I'm basically gonna predict, I'm gonna expect that price is gonna go bullish within this area after taking out the liquidity, okay? That's very important here, okay? Because since buyers enter positions in here, and literally all the way in here, because this is all a buildup basically, their liquidity is going to be below this low. And again, that's when we want to look for buys. Okay, so how do we enter now? Buy limit can be set just like this. Stop loss is going to go, if you follow my crosshair to the left hand side over here, stop loss is going to go right below that low, and that's always going to stay like that. So again, this low here determines how big our stop is going to be. Sometimes the stop's going to be all the way down here. It's going to be a little bit bigger. Sometimes, in some cases, it's going to be smaller. So basically what I'm trying to say here is the market dictates how big my stop is going to be. Okay, so it's very systematic. Now, what can we target? I mean, we have plenty of targets to the upside. If you can see here, look at this whole buildup we had on the way down. Okay, this is all a buildup of liquidity. Right? You can mark it on as trend line. You can mark it again like a channel, like I had before. However you want to mark it, that's fine. If you want to zoom out a little bit further, we even have more internal highs over here, right? Why would I mark this on as liquidity? Check this out. Low taken. Highs are respected here, and we move away, right? So we're going to view this high as liquidity as well. So a great target could be up here. Drag all that all the way up, and yes, it's quite a big target, so this could take the day to play out. It could take 2 days to play out. However, you got to follow step by step and understand, if we did take a long here, look at all the internal liquidity we've left. Look at all these highs here. Equals trend line, another high up here. We could possibly get short-term reactions up here, which is fine. Okay, but overall, look to the left-hand side. We have this. Okay, and this high respected the highs to the left. So same thing applies. We now have liquidity above those highs. Perfect. So if I play out a candle, I think the next candle tags this in perfectly. All right, look how now buyers have been trapped. So anybody that was looking to go long above these lows, trapped. Okay, liquidated, taken out of the market. And I believe this was a news-driven move, so bear with me here. I think it's quite fast. And we start getting some momentum to the upside, another candle, and then I think it gets quite volatile soon. And boom, target hit just like that from one 15-minute candle. I believe this is when Powell was speaking, okay? And that's why the volume was kicked in so much. This ended up being over a 300 pip move on gold, okay? But yeah, just a quick summary of what's been going on here. Remember, we need to see this occur, okay? Because this induces early buyers into the market. They're gonna be looking for longs inside of this POI here. We allow all this to occur. We want to see them get induced. And then as soon as they get trapped, this is when we take advantage of that move. Thank you guys so much for watching. I hope you guys enjoyed. Remember, the sole purpose of this series is to help you guys identify all of these concepts in live time, to train those eyes. Please like, please comment, share the video, subscribe if you haven't already. We have a lot more stuff coming. Talk to you guys soon.